As many of you know, it looks like Biden will become the 46th president of the United States. And as it happens each time when a new administration is in the White House, new tax policies are proposed. After hours of reviewing his policy proposals, here's everything that you need to know in less than 10 minutes. Hello and welcome to the Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, and volunteer paramedic. I apologize if I sound a little bad, and I probably look horrible. I'm just getting over being really sick. Anyways, down to the content. With Biden in the White House, several sweeping provisions are likely to be enacted. Of course, with the Republican-controlled Senate, some of these may be a little bit difficult to get approved rather than others. However, the Republicans are going to need to kind of pick and choose their battles, and they may need to acquiesce on some of these items. In addition to significantly increasing taxes on individuals with income greater than $400,000, corporate tax rates are also likely to increase. A number of proposals affect large corporations making over $100 million per year. But I'm not going to go over that in this video because likely that's not going to affect either one of us personally. Those changes will cause value changes in our stocks, and he has proposed several changes that are going to affect our retirement and brokerage accounts, like our 401ks, and how they're going to be taxed. I've already covered all that in a previous video. The link is in the description below. Today, I'm going to give you a quick summary of the proposed tax changes to individuals and small businesses, and what we can do about it. Before we get to that, an important reminder. As my regulars already know, I have a team of outstanding lawyers that I keep chained up in my basement, and they get a little bit rowdy whenever I start to make videos about taxes, laws, etc. The only way to calm them down is to give a little quick disclaimer. I'm not a lawyer, I'm not a CPA, I have absolutely no certifications, I'm just some random dude on the internet. This is not tax or financial advice. If you want advice, go talk to a CPA, blah, 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 blah. You get the point. Also, now may be one of the last moments for you to invest in the stock market under the current lower tax rates. Deposit $100 in Webull, and they will give you 3 free stocks valued up to $1,600 each. Don't wait until Biden's tax policies are implemented. Well, unless you like paying more taxes or something. Okay, with all that out of the way, here's a summary of the changes for individuals and small businesses. The individual income tax rate will increase on incomes greater than $400,000 from the current 37% to 39.6%. This is a return to the pre-Trump tax plan rate while leaving most of the other tax brackets the same. This by itself will not change your tax by much. Only about $10,000 additional taxes per year for every $400,000 of taxable income. Yeah, I know, it sucks, but it's only the tip of the iceberg of how bad things are going to get. He also proposes to tax ordinary income and capital gains at the same higher rate for anyone making more than $1 million per year. That is a difference from about 15% from long-term capital gains. Now you'll be paying 39.6%. So how does this affect you? Well, let's say you were smart and you purchased Tesla stock back in March, as I did, when it was at its record low of $88. Now, that is the adjusted post-stock split price to make it easier for comparison and more straightforward. At the time, the stock was actually $300, but that would make things far more complicated because remember, you would have, for every one stock, you now have 5. Anyways, if you would have purchased $10,000 worth of Tesla stock at $88 per share, you would have 113.6364 shares. But let's just round that to 110 shares to make things far easier. Based upon today's Tesla stock value, it would be worth approximately $54,670. Now, let's presume that the stock value stays the same until March. That way you will own these stocks for 1 year and it'll be considered long-term capital gains instead of short-term capital gains. If you were to have sold them, you would have made a profit of $44,670. Under the current tax law, you would owe 20% on the profit. Thus, you would owe $8,934 in federal taxes on your profit. If instead you were charged 39.6% as proposed, you would now owe $17,689.32. And I don't know about you, but doubling my federal tax really sucks. He also proposes to apply the old age, survivors, and disability insurance, that's the OASDI tax, of 12.4% to income over $400,000. Currently, this only applies to wage income under $137,700. Currently, how this works is employees and their employers split the 12.4% cost of all wages up to $137,000. After $137,000, there's no additional tax. Now Biden is proposing to add an additional tax if you earn greater than $400,000. Now, oddly, in his proposal, you pay absolutely nothing extra if you make between $137,000 and $400,000. Very strange, as this would tax the lower income and the higher income at the same proportional amount, but not anybody making between $137,000 and $400,000 a year. Maybe this is just an oversight in the summary. I presume in the end, Biden will probably end up taxing everybody. I said this a few months ago in one of my reactions to Meet Kevin, where I told him that the 1031 exchange might be on the chopping block. And yep, here they are. Biden is proposing to remove altogether many real estate investment tax incentives, including the 1031 exchange. Now, this would be pretty interesting to see if this gets passed, because a lot of ultra-rich that financed Biden's campaign would not approve of such a tax code change. Now, from my perspective, the biggest takeaway here is how small businesses, which are typically LLCs or S corporations, will end up seeing their taxes increased.
In order to first understand corporate taxes, you got to understand the difference between pass-through entities and not. And so if you're a business owner, you may have one of these structures right here on the left. You have single-member LLCs, multi-member LLCs, partnerships, and S corporations. Although these entities right here file their own tax return, they do not pay taxes as an entity. So what all these entities have in common is that they will flow, the income of these entities will flow to the personal tax return. And on that tax return is where you would pay taxes on the income of these businesses. And the taxes there will be calculated based on your tax bracket, your individual tax bracket.
With the increase in the proposed tax brackets, not only does it hurt working middle-class individuals, it crushes small businesses that make over $400,000 per year in profit. As a side note, the media and many politicians love tossing around the phrase, "make the rich pay their fair share." The truth is, there are so many carefully written loopholes in the tax code that the ultra-rich always find a way around it. I cover this in great detail of how high net worth individuals really don't care what the high tax rates are mentioned in the headlines, because they know that they can just use their exemptions to get away with paying nothing. You should check out my video where I covered in great detail how the rich pay nothing in taxes and how you can do the same. The odd thing is, many of these deductions, many of which are used by the same wealthy individuals that finance Biden's campaign, will disappear under his proposed plan. This leads me to believe that much of this was just campaign promises. Of course, if this dumpster fire of a year of 2020 has taught us anything, the unexpected often happens. With all this in mind, what should we do? Well, here is an excellent video from a fellow YouTuber interviewing Eric Freeman, CPA.
Planning for the changes that are coming, it's really almost backwards to traditional logic, because generally what you're trying to do is defer your taxes, right? We have all these provisions in the tax law, like 1031 exchanges, where the whole concept is, I don't want to recognize my gain now when I sell. I'd rather roll that gain into another investment and recognize it later, because, obviously time value of money is very important. It allows you to buy bigger things and generate bigger cash flow. So it's a great wealth building idea. Now, with knowing that there's a very high probability that taxes will increase across the board, and that is not only on your wage income, but it's also on potentially capital gains income. We've had historically low capital gains rates for the last 20, 30 years. And, most people are paying 15%, but Biden's proposal is anyone over with income over $1 million, they would be paying at their highest ordinary income rate, which under his plan is almost 40%. And then you tack on state taxes and everything else. I mean, you're up to 50% of your gain is just gone. So it may be a time where you actually think about accelerating some of those capital gains if you're above those thresholds.
Okay, I think I went a little over the 10 minutes that I promised you. I'm sorry, but there was so much information that I really wanted to cram in this video that I wanted to make sure you guys got it. Thank you very much for watching. Please make sure you click like and subscribe. Doing so really helps the YouTube algorithm. I appreciate it. I'll see you on the next one, and by then, hopefully, I'm feeling much better. Thanks.